Welcome back, fellow value investors. In this video, I'm going to be covering a really neat company by the name of Catalyst Pharmaceuticals. This is a small pharmaceutical company that is growing fast. It's profitable, it generates free cash flow, and has a good balance sheet. It was a company that was introduced to me by a viewer who put it in the comments and said, "Hey, what do you think of this company?" And I looked at it and I really liked what I saw. So I analyzed it and started buying shares in Catalyst. I'm going to update my analysis because Catalyst announced their earnings for the third quarter of 2023. I have a fresh set of financials, so I wanted to see, update my analysis and see if I'd like to buy more shares, hold or sell my shares in Catalyst. I'll share my analysis and my process with you. Before I jump into that, please like my video and subscribe to my channel. Now let's get into the video. Over the years, I've developed a process for myself to evaluate companies and make decisions whether I should buy, hold, or sell. And the first area of my review is all about the company. I really want to think that I'm going to buy a part ownership of that company, that I like the industry and I like the management team. It's all about the company. I have to feel good about the company, or really it's not worth investing. I have to get a good balance sheet. The balance sheet tells me how many problems I'm buying into. If it has a healthy balance sheet, it's a well-run business, and that balance sheet says that there aren't big problems like big debt that are going to hold the company back. And I want to discount the stock. I'm a value investor. I try to buy at a good discount so I can see my investment go up in value. And based on what I discover in those areas, I buy, hold, or sell. About 5 years ago, Catalyst came to market with a treatment for LEMS. People that have LEMS, it's a very serious condition, and their treatment has been proven to work for a lot of people. So it was a very successful launch. And this company really had one product that was a huge success, but they are beginning to grow into other areas and beginning to sell this treatment around the world. Catalyst is growing. They are both taking their very successful treatment for LEMS and making people in the United States more aware of it so that more people can receive that treatment. They also are commercializing a new drug that they've developed and will be taken to market in 2024. They want approval of the treatment for LEMS in Japan, which will grow their revenues as they grow around the world, which is really interesting. And they're acquiring businesses. They have a really strong balance sheet, so they're able to acquire businesses without taking on debt, which is really good to see. Catalyst announced their earnings less than 2 weeks ago, and I have a fresh set of financials. So let's take a look at the income statement. Revenues grew almost 80% if you compare it year over year. So that's a phenomenal growth in the quarter. They went from 57 million to 102 million. Great job. Part of it was that they have this new product that's really expanding the revenues. That was a good part of the growth that they saw on the top line. What's important is that they were profitable. Very good to see. Showing the 5-year growth that they've had. You could see that they really launched their new product way back in 2018, 2019. And ever since then, you have just seen just really dynamic growth in the company. And that growth isn't going to stop. And this is a really, really interesting company with a very exciting growth trend. So Catalyst has been achieving a lot. First, they acquired this particular treatment and they have it commercialized. They're getting revenues, profits from that treatment. Great job acquiring and growing. They are also looking to commercialize another treatment, which is going to further increase their revenues in Q1 of 2024. So it's really setting up 24 as a good year. And in general, they're a good pharmaceutical company. They continue to develop and to increase their pipeline of additional pharmaceuticals and treatments that will help them grow in the future. Looking at their statement of cash flows, this company generates cash, and it's great to see a young company growing that generates this amount of cash from operations, almost $88 million for the first 3 quarters of their year. That's a good increase from last year. Very good to see. And they don't have to spend a lot of capital on their business. So that's very good to see. So most of their cash from operations ends up being free cash. In the investing activities, you see a negative $162 million. And that was the acquisition cost of one of the treatments that they're already going to market with that they acquired. They did it with all cash. Looking at the balance sheet, it's really strong. They have cash and they don't have any debt. But you can see their cash position went from 298 million down to 120 million. And I referenced that acquisition. So they acquired another business to grow. Their cash position went down, but it's still a fairly high cash position based on the fact that the size of the business, and they don't carry any debt. So I really like their balance sheet. I really like what Catalyst is doing as a company. I believe the Catalyst is discounted by 56%. And what that means is I think their share price is really worth about $22, but they're currently being sold for $14.06. I get there by looking at their cash flows and trying to discount all the cash flows I expect from the company. That's one valuation. And the second is looking at the earnings per share, trying to estimate where earnings per share will come in the future and discounting all those earnings per share into today's value. The cash flows that I used, I'm looking at 2022, and it grew up by about 20% to establish what I think they're going to do this year. That's the starting year. And then I'm going to grow cash flows 20% because they are dynamically growing. So I expect that type of growth. But in the future, I'm only going to grow at 5%. So I'm looking at cash flows in the first 4 years of these amounts. And then the terminal value is going to be $3.6 billion, which is cash flows beyond year 4, all free cash flows. It's a small company, so I'm going to go with a high weighted average cost of capital of 12%. When I discount all those free cash flows, I get to $2.6 billion of value in those cash flows. I'll add the cash. There's no debt to deduct. So I get a $2.7 billion equity value in Catalyst. Their market cap's $1.5 billion. So it offers a nice 74% discount if you look at their free cash flows compared to their market cap. And now earnings per share, they are a growing young company. So are they as profitable as I expect them in the future? No, I think they're growing. They probably have some costs that are marketing costs and just ramp up costs. And as they mature, I think their profitability is going to go up. But for now, I think the next 12 months, it's going to be about $1.19 per share. I'm going to give them a nice PE of 18. If they really get the market's attention, I could see their PE being in the 40s, frankly, because their growth is really good. Their expected growth rate for me is 5%, which is a little conservative. And I'm going to use those factors and discount earnings per share to today's value. And I get a share price of $16.98. Current share price is 14. So you get about 21% discount if you look at earnings per share. I'm going to blend the two, but put more weight in free cash flows. And I get a 50%, 56% blended discount on Catalyst. Looking at where the Catalyst stock price has been over the last 12 months, it's been on a pretty good downturn, but it was priced pretty much at where I'm valuing the company less than 12 months ago, which is interesting. But it's really gone down. It's down 22% year to date. And but the stock is up 20% in the last 2 months. I'm a value investor. I love picking up companies that are severely discounted. And when you see the fundamentals on a company and you see these types of drop-offs, you know, something just isn't right in how people are valuing this company. And I'm willing to put my hard-earned money, you know, on this company. So I bought in these low ranges and I'm up on the stock, which is good. And I think that there's more upside from their current stock price up to where I think the stock is valued. So Catalyst, the stock price has been dropping in 2023, but so has the whole healthcare sector. If you look at the whole sector for the last year, it is also down, which is a surprise. Healthcare historically for me has been a really good performing sector. Pharmaceutical companies have been really good. And if you look at the 10-year, right, geez, just really good returns. But the last year, I think pharmaceutical companies are down. Healthcare companies are down, which is interesting. Now, looking at the recession that is coming up, healthcare companies are good during recessions. People will buy their treatments in good times or bad, economically talking, because they need to get themselves healthy. So healthcare companies are a good investment during recessions. This is a sector that's been beaten down. And Catalyst is really, just performing within healthcare. It's a smaller company, so it's beaten down because the whole healthcare space has been beaten down. Showing the healthcare space compared to Catalyst, you can see that the whole healthcare space has been on this downturn, and so has Catalyst. So it's not like Catalyst is the black sheep and the big problem child within the sector. No, the whole sector is down, which is interesting. And I'm a value investor, so I'm happy to buy stocks and buy into sectors that are beaten down for no reason. And I am very interested in the healthcare space at this time because I think it's really going to rise in 2024. So I've analyzed the company. Now that I have these fresh financial statements, and now it's decision time. Should I buy, hold, or sell Catalyst stock? First, the company. I really like the company. I want to be part owner in the Catalyst company. I think it's a great industry. I think it's a great industry as we go into a recession. And I think the management team's doing a great job. I really love how they're acquiring other drugs and other licenses in order to expand their company. I love that they're expanding around the world. That's very good. Balance sheet has no debt. And you can see that a good balance sheet enables a company to grow. It doesn't hold them back, which is very good. And they offer a fantastic discount. So I'm going to keep buying shares in Catalyst. So that's my analysis on Catalyst and my decision that I'm going to buy more shares. Thanks so much for watching. Do me a favor and like my video and subscribe to my channel, and please leave a comment. Thanks again for watching.